Ladies and gentlemen, welcome to another episode of the NZ Property Ladder podcast. I'm your host, Jean, and today I'm very excited to have a very special guest in the studio today, Cameron Marcroft from Loan Market in Remuera. Welcome, Cameron.
Thanks, Jean.
Cameron, you own the Remuera franchise, is that correct?
That's right, yeah. The business is based in Remuera. It's a business that I started about 10 years ago just under. And it's a business built up on good people who really share a passion to helping people achieve their financial goals.
Your franchise has been very successful. And so what are some of the processes that you've implemented that contributed to your success?
Yeah, at Loan Market Central, we're really focused on making sure that client interaction with us is as best as it can be. We call it the red carpet service. We roll it out and we want to make sure that when they interact with us, it's going to be a lifelong relationship as long as that loan is with them. We want to guide them along the way to not only getting into that property, but helping them reduce debt by coming up with the repayment ideas, structures, reviews annually, building towards their wealth, which could mean property portfolios. So when they're in a position to buy, we're able to tell them how much and then move towards that next transaction. So when they get to ultimately retirement, we want them in the strongest position possible. And there's a number of areas that, it's not just the mortgages that we want to assist them in. When you're building an asset portfolio, you need to be able to protect your assets. So insurance is a chat to be had. We also align with a KiwiSaver advisor, and that's around trying to maximise their KiwiSaver. So all of these things work towards achieving their financial goals and getting to retirement and being in a much better place than what they would have been if they had not met us.
No, that's really incredible and it's really efficient. And you guys work with a lot of banks, is that correct?
Yeah, there's many banks or lenders, we call them, on our panel. In New Zealand, you've got 5 main trading banks, your Kiwi Bank, BNZ, ANZ, ASB and Westpac. But outside those 5 banks, we have probably, on any given day, 30, maybe 40 different lenders out there that play in that probably 7 to 8% market share of the market. The banks have an appetite for lending, but generally very risk adverse. So when it comes to development funding, second mortgages or a unique type of lending situation, we need to have as many options possible open. And it's our job to navigate the best options out of all those banks' lenders for our clients.
That's really good to hear. In terms of the banks, I know there's the 4 or 5 major banks, generally like ASB, ANZ, etc., Westpac as well, and there are the private lenders as well, or the non-bank options as well. What are you currently seeing at the moment in terms of trends with each of the banks?
Yeah, the banks still will be the majority, right? They're the cheapest money, and that's our first cab off the rank. We want to make sure they fit in that space, but there are plenty of deals that don't fit in there for various reasons. You might have a bridging scenario. You might have, like I say, development funding, which means that people are wanting to build these developments to then on-sell. They don't have an income while they're doing this because their income is at the end when they sell. And non-banks and certain options can give that the necessary funding for those clients where they don't make the repayments. It all gets capitalised, fees, repayments, and then at the very end when they sell their property and they've done their margins and numbers, that non-bank would then get paid and they would walk away with their profit. So there is many different scenarios out there that don't fit main trading banks, and we actually have specialists in our team that focus in that area. We think it's an area that not many brokers probably do well. They're focusing on the banks so much. You've got to understand there's different policies with every single bank, non-bank, and when you have 30, 40 of these options, it's impossible to stay completely in control with them all. as they change regularly. And so within our team, we've got 13 superstars, I call them, based in our office that are specialists in certain different areas, which allows us to make sure that, again, that client experience is top-notch.
That's really good. And by areas, which areas would you say they specialise in?
Yeah, so we probably put our first-time buyers. There's certain particular products that the first-time buyers will sit in. First-time buyers are very different. That this is a first experience for them, and it's, as I say, they're not buying a pair of shoes. It's a big-ticket item, and therefore there's a lot more questions and there's a lot more assistance needed to make sure that, along that process it's not stressful, they're not anxious, because it is a huge decision, the first home. So we have first home specialists. We'll have guys that will sit in the property investment. That market a little bit more dormant at the moment, but the property investors starting to come back. Non-bank specialists, definitely. That's really important. I think that's a complete unique side. And mortgage brokers will try and do everything. And some can do that, but I think it's very define those areas. We'd like to make sure we get specialists just working in that space to get that outcome.
That's good. And I do understand that there are certain first home loan products out there to help first home buyers buy and get onto the property ladder. I guess, what are you seeing at the moment in terms of those first home loan grants and products, and has it been beneficial to date?
They're really awesome products, but there is criteria with them and they don't suit everyone. For example, your income has to be lower than a certain level and you can't go and buy too high. So, when people suit those categories, they can get a loan with 5%, for example, but they are restricted to what they can buy. In Auckland, that can sometimes be very difficult when your property prices are quite high. But we do have clients that do get those deals across the line, and they're awesome.
That's good. And so, for example, what kind of banks offer that? Is it like ANZ? Does ASB offer them as well? Or?
No, it's a government-funded product, so it's Kāinga Ora, which is sold through Kiwibank, Westpac, and then you've got the likes of Co-op, Southland Building Society. So there's not too many that have those particular products, but the Kāinga Ora will work through those types of lenders. There's about 4 or 5 of them.
No, that's really good to know, because for auctions, for example, and this seems to be quite a common situation actually with first-time buyers when it comes to bidding at auctions, because from my experience, what we saw was that first-home buyers, when they find a property that they like but it's going by auction, their mortgage brokers tend to advise against bidding at auction.
Yeah, it is a very difficult one for clients that have got less than 20% deposit. And the reason being, when you've got less than 20% deposit, generally the banks will want a valuation. And so the clients have that option to get that valuation before the auction, or they not get it and get it afterwards. Now, there is a lot of risk to getting it after the auction. Because if that valuer doesn't see the value that they paid at auction, it could value under, which could actually ultimately cause the deal to fall over. So it's a really hard one. Now, if clients get the valuation done before the auction, that's a cost that they'll wear. Could be anywhere from $1,000 to $1,400 per auction. A first bid might go above that price, and they've spent that money and not won. So it's a tough situation. What we tend to do is talk through the options available. So first-time buyers might be at 84%. We then go through, is there a guarantor scenario that we could bring mum and dad in if we had to, if we felt the valuation wasn't going to stack up. So we want to get backup options to 100% protect our clients in that situation. Parents might be able to find a gift if the valuation didn't stack up. which would give us a backup to not get it before the auction. But it has to, the risk has to be completely minimised in this situation. And so it's exploring all avenues possible for that particular client to make sure that they can go to auction.
What we're seeing at the moment at the open homes, especially with a house that's more like a first home buyer product, is that they tend to go directly to the bank for financial advice. I guess it's self-explanatory, and it does make sense from their end that why not just go through to the bank for pre-approval. So, but then down the line, what they notice is that they would end up going to a mortgage broker. Yeah.
Yeah, look, some people do go to the bank direct. Personally, I think they are far better off seeing an advisor, not just a little bit. Like an advisor's working with all banks, not just one. And the level of assessors in banks these days varies from very experienced to very inexperienced. So the result for that particular client could go into the bank and being told no when it is a deal, walk away and go, geez, we're not buying a house for the next 12 months. So a mortgage broker has a lot more experience, in my opinion, around assessment. That's all they're doing. Some banking tellers will be working on different stuff. In our business, we would be dealing with 30, 40 clients a day on various deals, and we get to see everything. We get to see what different banks are doing, policies, offerings, rates, and we're able to use that and take it on and use it with another client and get a better outcome. So that is an advantage of going to the broker. I could sit here and talk about the many other advantages, but a couple of other ones would be, our service is completely free. There is no cost to the client. You're dealing with one person for that life of that loan, as we spoke about earlier. Now, remember, when you go and see Mary at Westpac Bank to get your loan approved, that's about the last interaction you'll have with Mary. You'll go back for your refix review. You're talking to John. You're talking to Keith. You're moving along, and in 5 years' time, you're going back and going, where do I start? Who do I go and talk to? And I might want to change banks, so now I've got to work over there. That same person in our business is working with that client for the life of that loan. And so it's important, when you're selecting a mortgage advisor, to get someone that you get on with, like get a good accountant, solicitor, mortgage broker, get people that you're going to really get on with that are going to serve you well, because that decision is going to put you in a far better position later on in life.
That's really good to know. And what's your approach for a first-home buyer versus someone who's already on the property ladder?
Well, I think it's probably similar advice. To me, debt can be your friend as long as you respect it. Debt will make you wealthy, again, if you respect debt. So when you're a property investor, you're wanting to accumulate property. Now, there's two things that can stop you. That's equity and servicing or income. And when property prices drop, equity drops, so it can stop you. But having a clear plan around building that portfolio, maybe split banking, trying to work out ways to get to that next property. We might focus on the one we're buying today, but there might be a focus on, hey, we want to get another one within 2 years, right? Well, what is our method, policy, process is going to be to get us there? With first home buyers, there is a little bit more of just getting them to understand the process. It's very foreign to them. What happens next? They've found a property. Who do they see? What do they do? What conditions they put in? So there's a lot more of just taking them through that process so they understand and make sure that they become experienced people in the future.
That's totally understandable. And I know we touched on this earlier, but what about home loans and pre-approvals and such? But what exactly is a home loan pre-approval and how important is it?
So pre-approvals are very important. It's like you use the old adage of a check, getting given a check to go shopping, and many of you may not be as old as me to understand what a check was, but you get given a check to see how much you can spend. There's no point going shopping unless you know what you can afford. because you're just probably wasting your time. So always get pre-approved. This is an approval from the bank just to say, hey, you can lend this amount of money with your deposit, gives you your maximum purchase price. Now, pre-approval doesn't talk about a property so much. So all it is, hey, we'll give you the amount of lending. The property is still very important. Banks need to approve that property. They don't want you buying a lemon. They don't want you buying something that's going to leak and be terrible, right? So they're going to stop you from that. So a pre-approval is part of the process. They still want to tick that property off, and that would become an unconditional approval once you've cleaned up all those conditions.
No, that's totally understandable. And correct me if I'm wrong, but I believe there are two types of offers or processes that you can go through when buying a property. And what we're seeing through the open homes typically is that some of the buyers are already pre-approved when they come and start looking. But the other group of buyers that we are also seeing is that their mortgage advisors advise them to look at properties first. And if they like something, then they can make a live offer. What's your opinion on those two?
Yeah, I mean, it's important that they have a approval before they go and find a property. That's definite. As soon as they've found that property, we get that ticked off from the bank pretty easily. We're just asking the property documents that the agent is forwarding to the client. As soon as they've been through the open home, that comes to us. We pass that on to the bank to make sure that the bank is comfortable with it, and then it's the unconditional stage. So if a client is, has come to see us, we will have them organised and in a very strong position, because what tends to happen in a market that does have a lot of competition, we're not in that today, but that will come back, is you can lose on a property like that. And so being in a position where you can offer an unconditional offer will put a client in a far better position than one that's saying, hey, I need 10 days to go and get finance and so forth. So making sure your offer is as strong as possible, being as organised as possible, will put you in a better position to buy.
That's really insightful to hear. And, being in the property market, why do we need a solicitor to help with the process?
Great question. The solicitor's job is to make sure that they look over the property documents and check to see there's not going to be any issues such as caveats, encumbrances, or the flat plans might not, they've got to be correct. So what they're looking for is anything that could cause issues with this property in the future. These issues tend to be when you sell a property. When you're buying a property, the solicitor, the bank, and us as the mortgage advisor will make sure that there is no issues on that property, especially in this New Zealand market where Kiwis in the past have done a lot of DIY where they didn't get consent from councils, and that, going back 15 years was really common. And all those bits and pieces that they've done, banks have got a lot harder to approve stuff now, so we're cleaning that up as we go. But it's important when you buy a property with issues, you get really good advice. Now, the bank's not going to say completely no, but they're going to look at it and understand why, and then want to know what the purchaser is going to do about it. The purchaser can potentially get bargains because of that. So if they're got the ability to complete the work and get the work done cheaply, then they're going to be in a strong position. So solicitor's job is really to look out and make sure the buyers aren't going to get caught out in the future.
What's your advice in terms of finding a good solicitor to help with the process?
Yeah, so we work with 3 or 4 solicitors, and we'll recommend those solicitors depending on the clientele and what's required. We know those 3 or 4 solicitors are strong performers, not just on their legal ability, but we also like personality. Again, like I say, making sure that they get on with our clientele. They're affordable, not too expensive, and they can turn around stuff in a good time frame. So we have solicitors that we work with that we can recommend. A lot of clients have their own solicitor, which is great, and if they don't, we'll recommend some.
How important is it to have no loan or credit card debt when applying for a home loan, what should someone avoid?
Well, it all depends on their situation. If people have debt already, now there's two types of debt. There's mortgage debt, and then there's probably what we'd refer to as slightly ugly debt, and that's your car loans, your personal loans. Those are loans that are generally on a higher interest rate. So we like to clean those up and include them into the mortgage because instead of getting 11%, they're now on a 5% rate. So we want to make sure that we're consolidating. There's not extra repayments going out where it's not needed. So when we come across a loan or a pre-approval and they've got existing credit cards, it comes down to their servicing. If it's very tight, clients will have the option of cancelling that credit card and getting a little bit more borrowing, or keeping the credit card and having the less borrowing. And like I say, we'd like to probably try and consolidate personal loans, car loans. Student loans are one of the best loans because they're zero interest, but they're quite taxing on pay slips. They can affect your borrowing capacity. So we talk about different options around using your deposit to pay that off, pros and cons. If a client wants to maximise their borrowing ability, we would be looking at doing those options.
No, that's really good. In terms of interest rates, I know there's fixed and floating rates. Which one should you use, either one?
Yeah, look, New Zealand's predominantly a fixed term mortgage market, and every mortgage structure we do for our clientele is very, there's no one fits everyone, right? It depends on their situation, their appetite to paying the mortgage off. Can they be aggressive or is it going to be conservative? But fixed mortgages, look, we like to split the mortgage up into maybe 3 tranches. Two of those would probably be fixed on different fixed terms. And then we like to have a revolving credit or an offset product. Now that is a variable product or a floating product. And that's the vehicle to paying the mortgage off faster we use. So when we're reviewing a mortgage every year, we set financial goals on their ability to pay that debt off. And that's just done from simple calculations on what they're able to save. We set that goal over 12 months. And then we check in to see how they went. If they achieved it, great. We're able to make lump sum reductions. If they didn't, they might have done some renovations, went travelling. That's part of life. We just realign those goals for the next 12 months. So a mixture of fixed and floating can be beneficial, but the majority of the lending, I believe, should be on fixed. It's a lower interest rate. It's just a small portion on floating that we use to pay off faster.
Understandable. So is it more of like a case-by-case scenario for each client?
It is, unfortunately. Like as easy it is to say, hey, take the fixed one, 2 in this. It really depends. For example, an investment property that is going to be interest only, I've really enjoyed the 3-year rates under 5% and set and forget, right, whether it's there and we know it's going to be, rent's going to be covering that mortgage. That's a pretty good rate for an investment property. We're not trying to pay that mortgage off faster. Where focus is on the owner-occupied for tax reasons, so we put all our effort into making sure that the owner-occupied is reduced as fast as possible.
It's always a hot topic talking about mortgage rates and buyers. It's always constantly for them reviewing their interest rates. There's a lot of chat about that and a lot of revisiting as well. And so what is one piece of advice you'll give to someone that's navigating through the mortgage process at the moment?
Well, I think if it's a first home buyer, it's having that dream that you want to be in your first home, because sometimes it does involve 6 months, 12 months, even longer of sacrifice. It's pretty easy in this world we live in to live check by check on our payday, spending everything that comes in. So deposit, having enough deposit. Now, the holy grail is 20%. That's going to be hard for a lot of people to get to, but as soon as you get to the 20% deposit, you get much better interest rates. You get a large cash contribution, and you can get the best rates. So I would for people that don't have that 20%, you can still buy, but we need to set pretty clear goals on getting them to 20% equity as fast as possible. So set the goals, hopefully achieve them. If not, realign and keep going until you do.
CVs have dropped. What's your opinion on that? What are you seeing at the moment?
Yeah, the CVs, they're not something we are focusing on. They don't mean much to us, and they don't mean anything really to the banks at this stage. The banks are using online valuations through the likes of Velocity and CoreLogic. So the council valuations really don't have any impact on what we do. Buyers may look at them to try and get an understanding of a value of a house, but they're very difficult too because they can be quite misleading. So personally, we don't really focus too much on the council valuations.
Well, thank you so much, Cameron, for coming here in the studio today and talking more about the home loans and about getting onto the property ladder. So, Cameron, how can we find you on social media?
Well, social media, we're Loan Market Central, Central being the franchise of ours. So Loan Market Central, if you Google Loan Market Central, you'll find us on our website. You'll see our 600-odd 5-star Google reviews if you want to have a read of that too. But we're on Instagram. We've got plenty of corny, cringy videos for people to watch that entertain as well. So, Loan Market Central, or you can Google Cameron Markroft and you'll find us as well. But jump on the Instagram, Loan Market Central.
Well, that's it, guys. Thank you so much once again and hope to see you next time.
Thank you.